It's been a crazy week in crypto, and today with GoMining, we're going to be breaking down this complex market into digestible insights. So let's dive into this week's wild ride in the cryptocurrency market with us. U.S. government's major Bitcoin transfer sparks bearish sentiments. On April 2nd, a U.S. government-controlled wallet initiated a transfer of approximately 2,000 Bitcoin, which is approximately $131 million, to the Coinbase Prime platform address. The crypto community speculated that this could be the authorities selling a portion of the assets confiscated from the Silk Road, which is a darknet marketplace, and this is perceived as bearish. This narrative has influenced investor sentiments, potentially contributing to the cautious outlook in the cryptocurrency market. When the U.S. government moves a hefty portion of Bitcoin over to an exchange, it is most likely going to sell those coins. This could mean more supply hitting the market and potentially lower prices ahead. As soon as rumors started flying about the possibility of assets from shady deals being linked to this move, it set off some alarm bells among investors. Quite a few began worrying over the idea that this could lead to increased selling pressure on the market. New investors, increased liquidity, and shifting wealth dynamics. Meanwhile, according to the latest Glassnode report, Bitcoin is seeing a major shift in its market dynamics due to a fresh wave of capital inflow from new investors and an increase in liquidity. The all-time high in early March triggered a transition into price discovery, which in turn has led to a high volume of supply being spent and profit taken as a result. Bitcoin's realized cap just hit a new peak of $540 billion, with the monthly inflow rate soaring past $79 billion. In addition to this quite massive capital injection, there's been a notable wealth transfer from long-term holders to newer investors, with approximately 44% of Bitcoin's network wealth now held by coins less than 3 months old. This signals active profit taking and a dynamic shift towards new market participants, a trend signaling fresh demand and speculative interest. Bitcoin's future post-halving. Insights on expected price trends and market dynamic. Using CoinGecko's historical and analytical perspective on the price of Bitcoin post-halving, we gain a more in-depth understanding of the potential impact of the April 2024 halving on the Bitcoin price. According to the report, data shows a pattern of diminishing returns after each halving, suggesting the possibility of more modest gains in the future due to the maturing market and growing supply saturation. While past performance and the novelty of Bitcoin's early years played roles in dramatic price increases after previous halving events, the current market maturity and the vast majority of Bitcoin already mined, around 93%, suggest more moderate future gains. For example, it won't be wise to expect major price gains like after the first halving, where the price of Bitcoin rose from around $12 per Bitcoin to around $1,075 per Bitcoin, marking an 8,858% increase. However, there's still plenty of room for future price growth in case demand outpaces decreasing inflation rate of Bitcoin, which is set to fall below 1% after the April halving. Besides global market liquidity, the ups and downs of cryptocurrency regulation and big picture economic conditions are all going to remain factors determining Bitcoin's future price. BlackRock and Securitize's pioneering move into tokenization. Speaking of continued maturity of the crypto market, we're increasingly witnessing a future where traditional and digital assets converge more seamlessly. According to security token market data, the overall alternative trading system or ATS volume for tokenized assets reached more than $110 million in March of 2024. BlackRock's collaboration with Securitize to introduce USD Institutional Digital Liquidity Fund or BUIDL, a tokenized money market fund, is making waves among investors. This partnership is seen to make the tokenization market closer to being under regulation and is a clear sign of the times. The traditional banking sector and the digital finance world are starting to blend together, with more and more major players becoming interested in digital currencies. BlackRock has put $100 million into the BUIDL fund as its initial funding, making it the biggest asset on Securitize, and just the first week, it gained about $175 million, totaling $275 million in assets under management, making it the second biggest money market product on the platform. The impact of the U.S. Treasury's fiscal health on the broader economy and crypto. It's clear the U.S. government is in a bit of a pickle with growing deficit and borrowing to keep its operations running. So this could change things in the crypto market in a couple of different ways. One, we have market volatility. So as the government tries to tackle money issues, like having to raise the debt limit, we might see a bit more unpredictability in markets across the board, including cryptocurrencies too. Crypto as an alternative investment. With government debt climbing and the threat of rising prices looming, some investors could be eyeing cryptocurrencies as a different kind of investment, or even a safety net against inflation. That said, it's all quite speculative and is influenced by broader market sentiment. However, the long-term risks associated with high debt levels, increased borrowing costs, and a potential liquidity crisis could lead to a more risk-averse investment climate. In such a scenario, cryptocurrencies might struggle as investors tend to see them as riskier bets. Debt growth versus income growth. The rate of debt growth outpacing income and profit growth indicates an unsustainable trajectory, leading to an increasing debt burden. In this scenario, there may be less capital available for cryptocurrency investments because financial conditions could be a lot tighter. So in this week's GoMarket Weekly Digest, we've seen a bearish sentiment spurred by a significant Bitcoin transfer by the US government. Even with a few hurdles along the way, the fresh capital flowing in hints at promising times ahead for Bitcoin. This is especially true when you think about the excitement surrounding its next halving event, something many are keeping an eye on. Additionally, BlackRock and Securitize's move into digital asset tokenization points to a maturing market. With all that's happening, the financial challenges hitting the US economy have the potential to cause significant disruptions, not just for traditional financial institutions and stock markets, but for cryptocurrencies too, which further goes to show how closely intertwined these systems are. So that's all we have for this one. Make sure to subscribe for more insights just like this, and also to stay up to date with the latest information.